What's going on? This is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world. And what we're going to talk about really quickly is how having more capital, right, benefits options traders. And so what I want you to understand is that as an options trader, right, a lot of times you're going to come into this particular space because you're trying to figure out how to create more income. And that's the average person that comes into this space. And that's what makes this particular space a beautiful thing, because it allows you to create income in a way in which you may never have done before, using your mind in a relatively short amount of time. And so it's a blessing to be able to be into this space. And we're very, very grateful. But we want to understand that if we have more capital, it allows us, what's going on, Joe? What's going on, Katrina? It allows us to play this game on a different level. And I'm going to kind of explain you some setups. So a lot of times as an options trader, when I look at options chains, and I look at a lot of options chains all the time, because I'm trying to figure out where the activity is on a particular chain to try to maybe figure out where a particular trade may be going or where a particular stock may be going. You'll see a lot of scenarios once you start to be able to recognize scenarios where if you have a certain amount of capital, you could play a lot farther out and benefit from a situation that you are very confident is going to happen. So let me give you an example. There's a company called Nikola. I think their ticker was NKLA. And they were supposed to do like hydrogen powered semi trucks. And they came out a few months ago. I think they IPO'd. I looked at what they was bringing to the market and I knew immediately that it was BS, right? I just knew it really wasn't a lot to it. It was a bunch of hype. And I immediately wanted to start buying puts on that company. But because they came out and there was so much activity on the options market, the premiums were very, very high. And when you're looking at a company like NKLA, I knew that that company was going to have a catastrophic fall. But because I don't have a crystal ball at my house, I can't predict the future, because if I did, I would just go play lotto. I didn't understand when it was going to fall. So I wasn't able to play long puts on it and just wait for it to fall, because I didn't have the capital to sit in that position. And so as an options trader, as you get more and more experienced, especially on the put side, you're going to see a lot of scenarios where you're going to be able to look at a situation and you're going to say, you know what, based on what I understand about the market, and with me, a lot of times based on what I understand about business, I know that this situation is not sustainable. They don't have the capitalization of a larger company with a lot of institutional money. That company did it. When you're looking at an Uber or something like that, Uber can stay around a long time because they got a lot of institutional money behind them, creating essentially what we call a price floor. Nikola didn't have that kind of massive institutional buy-in. So once retail loses confidence in that company, they're going to fly out of there. That stock price is going to start to fall off, right? Because a lot of retail ran in there because they think that's going to be a home run hit for them. They think they got the next Facebook or they got the next Tesla. Okay. So you're going to see these kind of scenarios, and they don't have to be penny stocks. These are going to be in mid cap, higher tier traded companies. I think Nikola at one time their share price was $70. Well, you're going to be able to look at that and know that that's going to go down. So right now, when I woke up this morning, I was really looking at that this afternoon. There's a company called Snow. I think their ticker Snow, but I think they're called Snowflake. I believe they're a real estate firm. They're really like a REIT, but they do like commercial properties. They IPO'd, I want to say, I think at 70. They're now like 250. So they're way, way, way above their IPO price. That's from retail. That's not from institutions. Institutions like Buffett, they probably bought in at $25. Okay? Because the institutions rarely buy in at the IPO price. If they do, they get in right at IPO. But so retail flies in at IPO. So that is a scenario where if you have the capital, you could buy longer dated puts going out a year, going out 6 months, and wait for retail to get out of that situation because they realize that the stock price is not going to go up. And maybe if they put out a bad earnings and earnings doesn't really excite people, there's a big sell-off. But you got to have capital to sit in these particular positions. So this is why capital is so important, because what capital provides is what I call staying power. And what I mean by that is, I'm going to give you an example. When you see the professional athletes of the sporting leagues and they decide that we're going to strike, right? The reason why the strikes really never work is because their employees are billionaires. So you got professional athletes, they're making millions of dollars a year, right? and a lot, which makes you rich. You're not wealthy making millions of dollars a year unless you mentally are programmed to understand how to take those millions and turn that into wealth. Most people that work for somebody else that make millions of dollars per year, it's just a check to them. So essentially, they're just a really, really highly paid employee. So what they do is they go on strike against billionaires, and these billionaires are wealthy. They don't have to work. They don't have to do active labor. They have money coming in from their investments. So what the billionaires know is that 6 months later, these guys are going to be broke because we're going to stop giving them money, and then they have to go back to the bargaining table and try to negotiate on terms. So capital has staying power. So when you're properly capitalized, you can sit in a position a certain amount of time and not worry about it because you have the money and the capital to sustain you in that position. And it's the same thing in the options market. You can look at Procter & Gamble options and you can say, well, you know what? I'm going to buy an at-the-money call a year out from now. And Procter & Gamble will be, 15, maybe potentially $20 past, right? Your at-the-money call that you buy right now today, a year from now. But you have to have the capital to buy that kind of play and then sit in that play, right? And so that's where capital is very important. So this is one of the things that we're doing in the options market. One is to try to create income, but then also understand the benefits of being properly capitalized, because a lot of us as black-owned businesses that go into certain spaces, we're not properly capitalized from the start, and it impacts our ability to do business the right way because we don't have the capital to sit in a position and stay there until things turn the way that we want them to turn. Okay? So when you're looking at your options plays, try to ask yourself, do I need to get further capitalized to try to make the plays that I want to make outside of looking at generating options income on a week-to-week, day-to-day, month-to-month basis? Are there plays that you know that you could be successful at if you get more capitalized, if you get to take a higher capital position? And how can you do that so you can benefit from those? If you got any questions about the highest paid part-time job in the world, if you're tired of selling or stealing money from your family, giving that to your employer, you want to get your time back, you want to learn how to create income at will using the markets, reach out to me about the highest paid part-time job in the world. Got the automated course, got the one-on-one course, got the Discord group, got the ultimate follow-up as part of you buying the course, lifetime follow-up, because as long as I'm still an options trader. And if you got any questions, hit me up. This is David W. Williams, also known as Diamond Dave. I'll talk to you later.